Hi, welcome to another Capitalism video. Let's talk about the fifth chapter of the book, Rich Dad Poor Dad. The rich dad just played the game smart. He did it through corporations, the biggest secret of the rich. It is the Robin Hood fantasy or taking from the rich to give to the poor that has caused the most pain for the poor and the middle class. The reason the middle class is so heavily taxed is because of the Robin Hood idol. The real reality is that the rich are not taxed. It is the middle class who pays for the poor, especially the educated upper income middle class. The idea of taxes was made popular and accepted by majority by telling the poor and the middle class that taxes were created only to punish the rich. In reality, it ended up punishing the very people who voted for it, the poor and the middle class. The problem was that the government's appetite for money was so great that taxes soon needed to be levied on the middle class, and from there it kept trickling down. However, the rich saw an opportunity because they do not play by the same set of rules. The rich knew about corporations. The income tax rate of the corporation was less than the individual income tax rate. This is the first secret of the corporation. The second way they found out, and this is a big one, that their expenses are not taxed, whereas an individual's expenses are taxed because he has to pay the tax as soon as he gets the income, whereas in corporation they pay expenses first and then pay tax. Now Robert Kiyosaki tells us in detail about what he did in his personal life. He used to work for Xerox, he formed his own corporation and used his income to buy real estate, and then he used to fix that and rent it. So he would buy a house, fix it and rent it to someone. He got more money, he bought another house, fixed it and rent it to someone else. He kept doing that. In less than 3 years he was earning more through his real estate company than from Xerox. So at this point, he became financially free. He bought himself an expensive car, but the important differentiation is that he bought this car using the company's money. So it was a company car. So it was a business expense, which means the money he paid for that car was subtracted from the company income. It means he did not pay taxes on that. So, this is the power of the corporation, that you get to spend the money first and pay tax on what is left afterwards. As an employee, you're taxed immediately and then you buy things. This makes a big difference. So, thus, we understand that financial IQ is essential, and financial IQ is made up of knowledge from four broad areas of expertise. Number one is accounting, what is called as financial literacy. This is the left side of the brain or the details. Financial literacy is the ability to read and understand financial statements. This ability allows you to identify the strengths and weaknesses of any business. Number two is investing, what is called the science of making money. This is the right side or the creative side. Number three is understanding markets, the science of supply and demand. There is a need to the technical aspects of the market which is emotion driven. Number 4 is the law. An individual with knowledge of the tax advantages and protection provided by a corporation can get rich so much faster than someone who is an employee or a small business sole proprietor. It's like the difference between someone walking and someone flying. Tax advantages. A corporation can do many things that an individual cannot, like pay for expenses before it pays taxes. It is one of the biggest legal tax loopholes that the rich use. For example, vacations can be board meetings in Hawaii. Car payments repairs can be company expenses. Health club membership is a company expense. Most restaurant meals are partial expenses, and on and on. Protection from lawsuits. When someone sues a wealthy individual, they are often met with layers of legal protection and often find that the wealthy person actually owns nothing. They control everything but own nothing. The poor and the middle class try to own everything and lose it to the government or to the fellow citizens who like to sue the rich. In summary, the rich with corporations earn, spend, pay taxes. People who work for corporations earn, pay taxes, spend. Therefore, as a part of your overall financial strategy, it is strongly recommended to own your corporation wrapped around your assets.